The market seems to be taking this all in stride at the moment. I guess they're waiting to see what happens next.
Yeah, I don't think there's a short-term problem after we lovingly fit the tariffs to the Chinese goods. The Chinese aren't under pressure immediately for very strong retaliation, and the tariffs don't matter that much to the U.S. economy as a whole. So I think the market is thinking we have not just a couple of weeks, we actually have a little more than that to try to figure this out. I think that's a reasonable short-term view. I do think there's medium-term risk because I think the problem in the negotiations is quite serious.
Meaning that as we get deeper into this and we see more of the friction that's back and forth, you think the market will reassess again?
Yes, because, I mean, they're having a meeting this morning, but if you're on the American side, if you're Robert Lighthizer and you're looking across the table at Liu He, he's not the one who delivered you the bad news. You've been talking to him for months, and the bad news comes from someone else. So the natural, result is that Lighthizer's got to look at him and say, you don't have the power to make a deal. Why am I even talking to you?
Well, you could say the same thing with Lighthizer. I mean, that's kind of the situation. We knew all along that there were two people who had to resolve this. That would be President Trump and President Xi.
Right, and there's a problem right there, which is that President Trump has correctly said we have hundreds of billions of dollars annually at stake in various ways in our relationship with China, and it really should not be addressed by letters and phone calls. It should be addressed by long negotiations between the two sides because they're very complicated and difficult problems. So you're right that President Trump and Xi Jinping are the solutions to this, but that's not necessarily a good thing.
Okay, so we are looking at months of these new tariffs actually being put on, 25% on $200 billion. If that's the way this kind of works out, if it takes that long to go through these negotiations, is it going to be different this time? Will those higher tariffs have an impact on U.S. consumers?
I don't think so. Not to say there's no risk to the United States at all, but just the U.S. economy is so large. If you run the numbers on what the tariffs are going to do, you're not going to notice in the consumer price index. I don't see why it would affect Federal Reserve decision making. There are certain sectors that are going to be hit. Of course, that's always true. But I think the risk to the U.S. is the tariffs put a lot of pressure on China, their levels of foreign exchange. If they last a long time, the Chinese will have to have more substantive retaliation than the moderate words they're using today. And that's going to hit certain U.S. companies and hit the stock market. It's really more of an equities risk than a macroeconomic risk.
So that's where you think this plays out? Is there any potential upside if there is a deal that's reached? You think the market would look at that and say, OK, this is a relief, we're through it?
Yeah, I mean, there'll be a relief rally. I don't think it'll be that large because, as many people have pointed out correctly, the deal is to avoid a downward spiral. It's not to solve the problems. The Chinese are not going to suddenly become good IP and trade actors. These are entrenched policies on their part. They'll be better for a while. They'll make certain changes. But we're still going to have U.S.-China friction starting in technology and extending all the way to things like human rights. So there's still going to be tension. It's just that worry about a sharp escalation will be taken away if we have a deal.